making of the environment we're in right now? I mean, because we've got so much stuff going on, it becomes quite difficult to see the wood for the trees in many ways.
Yeah, and especially as we're coming into the year end. So from our perspective, if we look at 2022, we do think that China still remains attractive, especially given valuations have come off versus developed markets. We've moved into more of a supportive, easing environment, both monetary and fiscally speaking. And also global portfolios remain really underweight China. So you have that potential impetus of going to China, where we do see potentially a correction in developed markets.
Earnings downgrades, though, is that likely to ease in any way in China? And how is that going to impact things for next year? And for those saying that there's time for a re-rating for China, what do you say to those that are also saying on the other side of this is just a short squeeze that we're seeing?
It's still, very much a stock pickers market in China, and evidence of this was even last week within the tech sector when you saw JD's announcement versus the earnings that came through with Ali. So from our perspective, again, it's about earnings visibility, and let's say the tech sector, if these companies can monetize, there are still a lot of names which are trading at incredibly attractive valuations that are completely being ignored, whether it's in smaller companies or the more value-orientated segments of China. And so, again, when we look generally speaking at the valuation, yes, you're probably going to see further downgrades, especially with the macro weakness we have seen in the second half. But we still think that China's going to outperform both EM and DM next year.
I want to revert to China a bit later on, but just get a sense of, is it because essentially people are seeing better prospects in other parts, in developed markets, particularly the US right now? Is that the case? And, after 2 stellar earnings seasons, can it go on?
Well, the issue we have with the US and markets like DM is that we've seen this huge amount of stimulus being poured into the economy over the past 2 years. And so what happens when that free money essentially stops? And is inflation really being factored? And there's still a debate very much about whether it's transitory or more permanent, although you are seeing more people say it's more permanent. And so because valuations are so stretched, it's about your margin of safety. Whereas because everyone was so bearish on China this year, especially given the regulatory news flow, you are seeing some attractive opportunity still.
How do you trade around the volatility in the bond market right now?
Bonds is definitely something that we need to be cognizant of. And also another big risk is both energy related, domestically in China, as well as more globally speaking, with the supply-demand situation, as well as we still have to keep our eye on the COVID situation, because, the lockdowns we do see in China can have an impact on PMI, for example.